Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, September the 12th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember, the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get this on. Economic data across the pond from Great Britain. We got CPI, core CPI, PPI output, PPI input. All of those economic data points came in better than expected, albeit just slightly. They did come in better than expected, so that looked pretty good on that front. Here in the United States, we got the National Federation of Independent Businesses, which is a small business index. It's the NFIB, and came in line with expectations, maybe slightly higher at 105.3, expected to be 104.8. And then we also have a 10-year auction going on today here in the United States. So that could make the market move a little bit. And earlier on, we got JOLTS job opening coming in at 6.17 million job openings versus the expected 5.96 million job openings there. So, and last month's number was revised down slightly. So anyway, job openings happening, that's good. All the economic data points coming out of Great Britain, good. Should send the overall equities higher, and possibly even crude oil as the assumption for consumption increases, the assumption for consumption, which is pushing crude oil slightly higher today. I think a lot of this disruption could wane on some of the bearish tone as well. So crude oil up slightly on the day. We do have gold coming off as people are flying into the equities. They're doing very well. Many S&Ps, all-time historical high. But the gold trying to hold on there. A couple of other things to talk about. Bonds coming off almost a point, down 24 ticks. Again, debt ceiling fears out of the way. Should pull gold down, should pull bonds down. Bonds are coming back into the realm of realistic proportions, if you will. Fed is going to hold off on increasing interest rates. This type of move is a fear of lower interest rates, believe it or not. So market coming back to reality in a sense now that the debt ceiling things are out of the way. VIX, this is a little bit interesting when you see the VIX catch a bid, start going a little bit higher when the equities are at all-time highs. It shows that there is a little bit of fear creeping into the markets as regard to whether or not the market's going to have a correction. So we're starting to see the VIX move just slightly higher, despite the fact that we're seeing things like the Dow up almost 60 points, up 56 points right now, up against the value area high. Hasn't been able to test that historical high that we saw last month, but still pushing higher. We've got the NASDAQ coming up just shy of the all-time historical high there. It did get up into the 6,000 earlier today, back down below that psychological level. That's going to act as a support resistance, despite the fact that we don't really have like a Fibonacci there or anything else. It's just basically going to be looking at that 6,000 mark, which happened to come up short. You can see back here on the 27th of what is that, July 27th. So that is always going to act as a psychological level. You can see we pierced into that, but are now kind of bumping up against that, if you will. And then onto the mini S&Ps. This is what I was talking about, new all-time historical high. I think the real resistance number is going to be the 2,500. As you see, we slowed down on the momentum getting closer to that. That's just going to be a psychological level as well. Nothing really to say other than it's just an arbitrary number that people are going to be looking at and trying to defend. But the E-mini S&P is up nicely on the day, up $6. You can see this print was in the day session. My time frame is off on that. That's around 10 o'clock Eastern. So that is a legitimate number as a high. But at the end of the day, it's really tight range, really kind of hard finding anything to do. Overnight, we got that rally and just made that all-time high about a half an hour after the open. But since then, everything's kind of quieted down. Excuse me. So, Apple. You guys know I have on some short calls in Apple. I have on a short call spread that is like a synthetic naked short in my IRA. And what I went in there and did is I sold the October 180 calls and bought the 205 calls to define that risk. Now, I wasn't going to take that risk all the way to 205, especially in my IRA. But at the end of the day, that defined the risk, so it appeases the powers that be that writes the rules for IRAs. And so that's why I put on that defined aspect to the IRA. Basically went out, bought a call for the first call I could buy for a nickel, and that's what I did. So I originally sold that for 80 cents and trying to get out of it right now for about 30, or actually I sold that one, for 75 cents. Trying to get out of that one right now for about 36 cents. I think it's trading around 40 cents, so I'm just keeping my eye on it. I haven't been able to get hit on it, but I'm probably going to have a pretty itchy trigger finger to get out of that one sometime soon. Then in my other account, which is my margin account, I'm also trying to get out of October, but they're just the 180 calls naked that I originally sold for 80 cents. They're trading for right around 41, 42 cents. So I'm working about a 38 cent bid for that. So I might start ratcheting that up. But at the end of the day right now, I'm kind of trying to get the penny rather than the trade. So I'm going to play that one out for just a little bit longer, but I might have a itchy trigger finger, so just keep that one in mind. The other thing is I threw in a order on MGM with a big down move yesterday and today. We got this confirmation coming down. I just wanted to put it in an order to kind of give me a trigger as to when to get out, so I just left and I'm putting that in as a GTC in my IRA, and I have on the October, and I am long the 36 puts and then short the 31 puts in there. I originally paid $2.40 right around there, $2.39 I think it is. So I'm trying to put in a working order to get out at $3.60, and it's trading around $3.20 right now, so give or take. So just wanted to leave that in there in case I get a little bit of a down move either in the next couple of days. I don't want to miss it. So have those working orders going right now. That's about all I've done. I'm kind of scrambling around trying to find something to do and haven't really found anything that tickles my fancy. So kind of being kind of quiet right now. That's about it, you guys. Other than Friday's webinar is going to be on the long strangle, so check that one out. There's certain rules that need to go into this in order to increase your probability of success. Yes, it is buying a call out of the money and buying a put or out of the money. What do we do? Where do we find that trade location? What environment are we going to implement that in? And how are we going to get out? All right? So check that out at protraderstrategies.com. If you can't take that, take it easy.